Welcome to another edition of our monthly newsletter. And on today's discussion, we're going to be talking about how to research an area for investment in real estate. We're going to be going through a few metrics that we look for when we look at certain areas for direct investment in real estate. Let's start on the demand side of things. So population growth. This is a huge driver to determine if an area is a good location for direct investments. And does your area have stable and sustainable population growth? One way that we look at figuring out the population is simply by just going into Google and just typing in the city, the state, and the population in the search bar. And this is going to give you a chart that shows you the trend of growth of that population of that city. You want to see an upward trend or a steady upward trend in that graph. Other sources that you can also look at are websites such as citydata.com, as well as another site that we always go to is the US Census Bureau, and they provide a wealth of information related to population for any cities in the country. The other item is labor growth. So this is a very important driver since population growth follows basically labor or the job market. Jobs need to be available in that city. Are there jobs coming into the location? Are there new projects being announced in your local city? Are large industries such as manufacturing, technology, education, and medical or eds and meds, as it's typically known as, shipping and logistics companies, and many other types of businesses, are these coming into your area? Are you hearing announcements related to these new businesses putting in new locations where you're looking? Also, keep an eye out for large Fortune 500 companies moving headquarters or opening up new headquarters in your location. This can mean hundreds of new good-paying jobs coming to your local city that you're looking at. City economic development. So it's a good idea to look at the economic development corporation of your city and determine what areas of your city have direct investments going to these areas. And a good way is to look into the websites, maybe even getting a phone call with some of the individuals working for these economic development corporations. They will share a wealth of knowledge to you related to what areas they're investing in, and for you to potentially just get in the way of that growth and that expansion that's being invested in that area.
Absolutely. So the next two that we're going to touch upon are diversity of employment and a favorable business regime. So diversity of employment, it's all touched upon the labor growth. On the diversity side, it is the fact that you don't want just a single industry or a single sector in your particular market where you're looking. So for example, you don't want to be investing in Detroit circa 2008, 2009, a market like Detroit that was so exposed to auto manufacturing. And then when that tanked, the entire area essentially fell apart. So you want an area that's well diversified in terms of its employment. And that way, any kind of recession or downturn that takes place, you'll be fairly well positioned because some industries will do better than others. We weight different industries differently based on the exposure to the business cycle. So for example, one of the industries that we really like is what Gonzalo said, higher ed, as well as hospitals, so eds and meds, as Gonzalo referred to. Also technology. Technology is something that's always going to be in vogue, always going to be growing over time. So it's also an industry that tends to bring along a bunch of other jobs. Some studies in the past where they say that a single technology job can create as many as 8 ancillary jobs. So that's going to be an industry that we overweight in terms of what we like to see in a particular market. The next demand driver that we'll discuss is a favorable tax regime and really more generally a pro-business government. We don't want to be investing in areas where government makes it very difficult to do business. I know California comes to mind for a lot of investors, certainly parts of the Northeast as well. This is not a political statement, but they tend to be a little bit more liberal areas where it's tougher to get stuff done in terms of, whether that be permitting or frankly, even just hiring higher taxes in a particular area can dissuade us from looking at that particular area. So you really just want a pro-business government wherever you're investing, because that's going to not only make it easier for you to do business, but on a wider scale, it's going to make it easier for other businesses to come in there and ultimately it's going to attract a lot more industry. So it has those knock-on effects. So we touched upon demand drivers just before. Now we're going to touch upon supply side, because it's not just about what's bringing people and jobs to that particular market, but also, is that baked in? In other words, have developers overbuilt in that area? And that's something you want to be keenly aware of. As far as supply growth metrics, you want to look at things such as starts. So how many houses have been started? Permits. So how many, that would be one level before starts. So how many houses have been permitted for construction? Development projects that have been announced in that particular market. All of this stuff, it will help create the picture of how much development is going in. Because again, it's one thing to have a ton of job growth and population growth, but if there's more development going on than can meet that and be absorbed by that growth in demand, then it may not be the right market for you. And then finally, as what Gonzalo stated earlier, when you talk to those city or regional economic development corporations, what you want to do is find out what is their plan and what areas of the city they're targeting in terms of development and where investment is going, where they're driving investment in that particular area. So those are the two supply side metrics that we look at. Now Gonzalo is going to touch upon submarkets.
Great. Thanks, Mark. A lot of good information there. So for related to submarket, it's not enough to just kind of know the city itself and that the city has really positive socioeconomic indicators as discussed. We don't just invest in the city itself. We actually invest in neighborhoods, in submarkets of neighborhoods. There may be great pockets of an otherwise struggling city that may be a better investment than really like a rough pocket of a very high growth city. So it's really important to understand the dynamics of your market and where your path of progress lies. So as we touched on before, it's important to know all areas of your city, the good parts, the bad parts, and seeing where the city is investing, making direct investments for, and trying to just get in the way of these path of progresses, areas that are slowly expanding out, and for you to potentially look at stuff in the way of those paths of progress, because eventually it will get to the area that you're looking at. And this is why we recommend that you invest in your local market. So where you live or within a short drive of where you are. Mark and I first got started in our local backyards many years ago. I don't think we would do it any differently than looking back on it now. These areas are already familiar to you. And in the event that you do find something and you do acquire something within a short drive, it's much easier to look after a property. It's much easier to drive to your property and just put your eyes on it than having to say invest over state lines or in the event that you have to get in a plane and fly there. So we're always a big advocate of getting very familiar with your local market and looking at properties within a short drive of where you are because you ultimately are very familiar with this market already since you already are located there.
Yeah, and that's something that can change over time, but initially we do like to say that you're already intuitively understanding of the area. So when you first start out, there's a ton to learn in multifamily, but if you could take the local market or sub-market analysis out of it, that's one less thing that you have to put a bunch of effort into learning an entirely new market. So when you're starting off, you may want to start off in your own backyard. With that, we're going to transition over to tools that we use to assess some of the metrics that we just covered. So one of the tools that I'll start off with is Google My Maps. This is a tool that we were given by a mentor of ours who really utilized My Maps to get more familiarized with markets that are outside of our own backyards. So as you're looking across state lines, as Gonzalo mentioned, or different regions of the country, you may want to set up a similar My Maps. I'll go ahead and share my screen so you can get a feel for what that actually looks like. So this is just a Google map that we're all familiar with. But if you search for Google My Maps, this comes up. And what you'll notice that makes it a little bit different than Google Maps is this layer over here. This basically has a bunch of different layers here. You can customize these. We've done zip code layer. We've done submarkets. And then you can do any number of other ways to really slice and dice the particular market here. You've got yuppie stores, as we call them there, local kind of tourist attractions, properties we look at. And basically, it just allows you to look in a particular area in this case in Nashville, and get a better feel for what's going on in that particular market. So we've got different areas here. You can write in different things about the particular area. You've got the zip code here. We put in some information on median income. And again, it just helps at a really high level to understand what's going on so that when you're looking at a particular property, you don't have to do a ton of research. You can just go into your My Maps and say, okay, yeah, I remember what's going on here. They've got a hospital here. They've got, the park here, maybe some local restaurants, that kind of thing. So it helps you really quickly analyze a particular market.
Great, Mark. Yeah, that's a really good, powerful tool that we'll touch upon a little bit later related to brokers and really being able to speak to your market and leveraging Google My Maps would help quite a bit with that. The next kind of tool that we are very excited and we've been using it for a while now. And again, we've picked this up from also our past mentor because he used it to get himself familiar with what's really going on in the market is Google Keyword Alerts. So I'll share my screen and I will give you a quick sneak peek of what this looks like. So if you just Google Google Alerts, you're going to come up with a screen that looks like this. And you can see there that you can create different alerts based on your criteria and what you're looking to kind of get out of it. And basically what this does is Google searches news articles, new headlines that come out based on your keywords. So some of my keywords are some of the target markets I'm in. So Charlotte, Louisville, Rock Hill, South Carolina area. And you see there, I always put in keywords such as development, real estate, jobs in the different markets. So what this then does is that you can select the frequency of this, and you should get email notifications of these different type of things. So to give you a quick demonstration, what this looks like. So in my Outlook, I have a folder that all of these Google alerts go to. So you'll see here on a daily or weekly basis, I'll get an email with a list of different articles that hit on those keywords that you've listed in those alerts. And this is going to give you a very good indication as to what's going on in your target market. So anything related to Louisville, Kentucky development, there's some articles here that came out on July 4th, just a couple days ago, on different things, activities that are happening in the Louisville market. And this gives us a very good idea of what's going on there. It keeps us plugged into the market. Since we don't live there, this gives us a great kind of leverage, this Google Alerts, to get us familiar with the market, new businesses that are coming in, anything that we would make sure that we want to be up to date with. So that way we can have more intelligent discussions with people that are local to Louisville, say brokers, other people local there, and we're able to be very plugged into the market. So that's a little bit on Google Alerts. The next tool that we leverage quite a bit is Reonomy, CoStar, Moody's Analytics. These are just a little bit more higher end, more in-depth products that is typically they're on a paid data, so you have to have a subscription for. But for people who are kind of starting out, as long as you're familiar with these types of property technologies, it's good to, once you build your team, say for example brokers, they have subscriptions to these things such as CoStar that you can kind of leverage your team to utilize CoStar to pull information on a property or pull information on a submarket of a city that you're looking at. So these types of softwares provide in-depth knowledge of real estate, providing you information such as vacancy rates, rental comps of your area. And again, by just leveraging your team, you're able to pull reports, but it's important to know these types of softwares that are out there and speak intelligently about them when you do speak to people in the real estate industry.
Yeah, the key to this software is having access to data at your fingertips. None of us is going to know, intuitively what the vacancy rate or going cap rate is in a particular market. So you're going to have to rely on tools like those that Gonzalo talked about, Reonomy's, the CoStars, and Moody's Analytics. And like he said, you want to have relationships with brokers who, when you're starting off, you're not going to be able to necessarily afford these subscriptions. So you're going to want those broker relationships in place where you can leverage them and kind of lean on them to provide some of these reports.
Absolutely. So the next topic we're going to be talking about is putting together your team. Your team is probably one of the greatest resources that you're going to be developing as you start investing in real estate. You need to have a good set of team members available in order to leverage them, in order to provide you the most up-to-date and latest information on the submarket that you're looking at. And especially if you're going to be investing out of state lines in the market that you may not be particularly well known in or very familiar with, you want to build this team in order to leverage them for that information. So we're going to go through a bunch of team members. I'll start off with property managers. So property managers are the boots on the ground people that you're going to rely on to look after your property, to maintain your property. So I would say it's one of the most important team members to first start off with. Property managers are going to give you a great idea of what comps are in the area, what potentially rentals you can get on a unit that you're renovating. So rely on them for that information, as well as average operating expenses for a property. They're going to give you a great indication of what that should fall in on a per unit basis. The next addition to your team is lenders. Local banks and local credit unions provide you a great wealth of knowledge as far as like the areas they're open to lending for, and areas in your local market that they're more open to lending to, depending on the type of development that is occurring in that area. So it's really good to leverage your local lenders to give you an insight of the market that you're looking at. The next one is attorneys. And as far as attorneys go, it's really good to leverage them also, as well as information on the local market. Local attorneys will give you a wealth of knowledge related to more in-depth information on what are good areas of the market, what are bad areas of the market, and where you should be targeting.
Absolutely. Now, the last piece, and I would argue most important, is brokers. So brokers, you don't want to start with brokers, and the reason being that you really want to develop a pretty good understanding of the market before you go to them and start asking them questions about a particular area. There's really no quicker way to lose credibility with brokers than not understanding what's going on in your target market. And so that's why I say don't start with brokers in terms of your team and leaning on them for local market knowledge. You want to develop a pretty good understanding of what's going on. You probably want to travel to the market and drive through the submarkets you're interested in. To develop an understanding what's going on there. And then at that point, you should approach brokers with the confidence of maybe asking, okay, I know this about this area, but what can you tell me about, future projects planned there or opportunities in this particular submarket? Because again, you want to always present the most professional and well-informed face to brokers. Now, the last, but I would argue the most overlooked aspect of your team that you want to be leveraging in terms of understanding a particular market is other investors. This is often overlooked by investors starting off, but this resource can be among the most valuable of any of the team members that we've talked about, and they can literally earn you millions. By having other local market relationships with other investors there, they're giving you free, unbiased, really no hidden agenda information that you can then use and put into action. Who's going to know better of where to invest and where you should be looking, and conversely, where you should be avoiding than other investors. And really, they have no incentive to give you bad information. It's not like they're, necessarily earning performance fees or commissions off of giving you information on a particular deal or market. And we always feel it's important to have people in your Rolodex that are investing locally that you can maybe get a second opinion on a particular deal or market from. After all, there's strength in numbers. So we've covered a lot in terms of the tools that we look at, the metrics that we look at. We're going to go ahead and in the show notes, in the video caption here, we're going to link to a resource that we put together. It's free, our top 30 free links that we use in terms of the resources that we look at whenever we're looking at a new market. So you can go ahead and in the caption, find a link to that free resource whenever you are looking at a particular market. So I'm going to go ahead and close out this video. And at the end of the day, you want to be, when you're doing your research on investing in a particular market, you want to be investing in areas on the upswing. You want to be swimming with the current. That is not fighting the tide. You want to be going in areas that are already growing and showing positive metrics so that you can basically just ride that momentum in your particular investment. Now, real estate is becoming more and more efficient with every year that passes. technology and access to free or low-cost data has made the market much more competitive. And as a result, there are less market inefficiencies. That is, there's less profit on a particular deal. As we say in finance, there's no such thing as a free lunch. So in other words, today in markets that are growing and exhibiting positive trends, they're also the most closely watched markets for that very same reason. That doesn't mean that you shouldn't do your homework when you're looking at a particular market, but it does mean that you shouldn't spend months looking for that hidden gem. That is that market that nobody else is aware of, where they have all the positive demand and supply drivers. Don't get caught up in analysis paralysis, because you're going to get stuck trying to find the best market that the rest of the industry hasn't heard of yet, and it just simply doesn't exist. So you have to get started at some point. The key is becoming an expert on a given area and then getting out there and taking action. So we'll close it out there. We encourage you to utilize the resources that we link to in the show notes and the ones that we've outlined in this video. So go ahead, get out there and take massive action. And as we say here at Maple Capital Partners, be kind, be charitable, and invest wisely.